cryptocurrency enthusiasts and investors alike cheered when Tesla announced that it had bought $1.5 billion in Bitcoin and had signaled its intent to start accepting Bitcoin as payment for vehicles. But the same group of investors were rightly disappointed when Musk said in May that the company was spending new purchases as he was concerned about fossil fuel usage for Bitcoin mining and transactions. But there seems to be more going on behind the scenes than what appears at first sight. Musk's stance towards Bitcoin may have merely been a way to create confusion in the market and profit from it. Tesla's Bitcoin manipulation may be linked to the renewable credit market and generates profits in the long term. So what's the story behind Musk's reluctance to accept Bitcoin? What does the renewable credit market have to do with any of this? Welcome to CryptoVision, your one-stop for all things crypto. Before we get into the video, please consider subscribing to the channel and hit the bell icon to get the latest updates. Leave your thoughts in the comment section below. With that being said, let's get into the video. While Tesla loyalists argue that the growing demand for EV is the reason for the company's profitability, this is far from the case. In fact, in 2019, over 7% of the company's revenues came from carbon credits that the company sold to other automakers. In California, and at least 13 other states, any auto manufacturer who wants to sell their cars into that state must sell a certain amount of electric, hybrid, electric, or other zero-emissions vehicle. Automakers who aren't selling these vehicles will buy credits from someone for compliance. Since Tesla exclusively sells ZEVs, it doesn't need to keep the credits it earns, and instead can sell them before they expire. In 2018, Fiat Chrysler announced a deal with Tesla to comply with new European environmental regulations which are coming into play. In a shareholder update, the company disclosed that its agreements with Tesla represented total commitments worth $1.4 billion. FCA planned to use the credits it's buying from Tesla to stay in compliance through 2023, with a deal being a blessing for Tesla. But things have turned around since then, as Tesla's carbon credit windfall has shrunk as rival automakers have started producing EVs. Fiat Chrysler's merger with PSA appears to have significantly reduced the company's emissions to the point that it doesn't need the Tesla credits anymore. Since the $52 billion merger, the new company Stellantis has ramped up its plans to go electric and aims to triple its sales of electric vehicles in 2021. By 2025, the company aims to have an electric or hybrid version of all its cars by 2025. Thus, Tesla will miss out on over $240 million in revenue this year, after Stellantis revealed that it would need fewer credits to meet the European Union tight emissions regulation than it initially thought. In Q4 of 2020, Tesla sold more than $500 million worth of credits, and this accounted for more than 5% of the total revenue of $9 billion. For EV enthusiasts and those concerned about climate change, it seems to show that the EU's efforts to push car makers toward low and zero-emission vehicles is working. Thus, Fiat Chrysler's merger with PSA may cost Tesla around $240 million, assuming that it can't find another customer for the credits. As Tesla's revenue continues to shrink in carbon credits, Elon Musk is looking to replace the revenues through Bitcoin. Tesla had a record profitable quarter in the first 3 months of 2021, even with 2 of its modules on the sidelines, posting a net income of $438 million, while recording $10.4 billion in revenue. This profit didn't materialize thanks to car sales, however, which is ostensibly the main business of an automaker. Rather, Tesla posted a profitable quarter thanks to the scale of its Bitcoin holdings. Tesla's sale of Bitcoin had a positive impact on earnings, which amounted to around $100 million. The automaker purchased some $1.5 billion worth of the cryptocurrency at the end of 2020, and has begun accepting the cryptocurrency for sales of its cars just a few weeks ago. It has now sold about 1/10 of its Bitcoin holdings, which helped its position in the first quarter of 2021, proving to be a bet that has paid off amid a sharp rise in the cryptocurrency's value. It also came at a time when CEO Elon Musk has repeatedly mentioned Bitcoin and other cryptocurrencies on social media. Tesla's revenues from carbon credits are shrinking as European automakers are shifting focus to EV themselves, thus no longer requiring credits from Tesla to comply with strict emissions regulations in the European Union. Thus, Tesla is looking to make up for this potentially permanent loss in revenue. One way the company is looking to do that is by seeking entry into the US renewable fuel credit market. Unlike carbon credits, which can only be sold to other car makers, the EPA's renewable credits can be sold in the open market to any industry. The electric car maker is one of at least 8 companies with a pending application at the Environmental Protection Agency tied to power generation and renewable credits. Tesla's entry could potentially reshape the renewable credit market, established in the mid-2000s to boost investment in the US biofuel industry. The market generated some 18 billion credits in 2020 and is currently dominated by ethanol producers. Tesla's application would likely be tied to the production of electricity associated with biogas. The Biden administration is expected to review the EPA applications and lay out how electric vehicles could qualify for tradable credits under the Renewable Fuel Standard this summer. The move could represent the largest expansion of the RFS program that was created by President George W. Bush and aimed at boosting rural America and weaning the country off oil imports. The entry of Tesla and other electric vehicle makers to the renewable energy scheme could attract investment for a much-needed infrastructure network, including charging stations for electric vehicles. The sudden change in stance of Bitcoin by Elon Musk has caused many to speculate about the true motive behind Tesla's purchase of Bitcoin. Since Tesla's production was halted due to the supply chain effects from the pandemic, there have been a lot of delivery delays. This meant that Tesla's shrinking profits from selling carbon credits wasn't enough to post a profitable quarter. Thus, Tesla decided to buy Bitcoin and sell some of it before the end of Q1 to make up for the shortfall, rather than to test liquidity as Musk initially claimed. The reason for Tesla's revenue from carbon credit sales shrinking is that the European car makers are shifting focus to EV themselves, meaning they no longer need to purchase credits from Tesla to comply with strict emission regulations in the EU. So Tesla finds itself in a position to make up for this potentially permanent revenue loss. One day before Elon Musk tweeted out that Tesla would no longer accept Bitcoin payments, citing environmental concerns, Tesla applied for a renewable credit certificate from the EPA. Some investors are speculating that Musk is planning to use this certificate to sell credits to various companies mining cryptocurrencies, and thus generate a huge amount of money for Tesla. The recent earnings of Tesla show what many had already speculated before. Tesla decided to buy Bitcoin, only to sell some of it to make up for the shortfall in revenues. With carbon credit sales shrinking in Europe as automakers are switching to production of EVs, Tesla is in the position to make up for a potentially permanent loss in revenue. Tesla is planning to use its renewable credits to sell it to various cryptocurrencies, and thus generate a huge amount of money for Tesla. Thus, the company is looking to both profit in the short and long term from Bitcoin. With that being said, what do you think of Elon Musk's manipulation of Bitcoin and its connection to the renewable credits market? Feel free to share your thoughts in the comment section. Thank you for watching the video, and please consider subscribing to the channel. Summary: Elon Musk's stance towards Bitcoin may have merely been a way to create confusion in the market and profit from it. Tesla's Bitcoin manipulation may be linked to the renewable credit market and generate profits in the long term. So what's the story behind Musk's reluctance to accept Bitcoin? What does the renewable credit market have to do with any of this?